Hi guys, this is Mosh. Welcome back to my channel. If you're new here and you have not subscribed, please subscribe, as this is the only channel that will make you rich, either in money or knowledge, probably both. Now, if you want to see my daily trades, how much profit I make, any losses I make, what I'm investing in, any updates, go in the description below. Check out my Instagram page. It's at Mosh Money Official. Today, I want to talk about how you go about buying startup companies. Not only that, I'm going to explain how I did it and what companies I have investments in. Firstly, why would you invest in startup companies? The obvious answer is going to be the potential growth. That company in a couple of years can become a multi-million or even a multi-billion pound company, like we've seen in many other companies before. Another reason is you could be ethically inclined. You might really believe in that company, what it's doing, if it's benefiting the environment or if it's benefiting people in some way. So that could be another reason. Also, if it's come up with a new innovation or new product, you might hope some other bigger company comes along and buys them out. And if you got shares in that company, obviously you can maximize your profits from that. The next thing is, where do you actually find these companies? Because they're not listed on any stock exchanges. One website I use is CrowdCube. I've been using them for many years and I've found some really good investments on there. I'm sure there are other websites out there. You just have to do a bit of research around that. You know me, I'm 100% transparent and 100% honest. I'll go through exactly what I've invested in and how many shares. So firstly is CARWOW. I have 30 shares in the company. If you're not sure who CARWOW are, they're an online platform that is for buying and selling cars. So it allows dealers to sell cars to customers. The next one on the list is a company called Dr. Lee. They allow customers to book private appointments with NHS doctors. If you're living in the UK, you know how difficult it may be to get an appointment with your doctor. So this app allows you to book an appointment for a certain fee, and generally you can get an appointment within the same day. Next on the list is Freetrade. I have 654 shares. Now, I recently done a review of Freetrade. Please go check them out. I'll link it in the description below. One of my best investments is next on the list, is called PodPoint. They make electric charging points in the UK for electric cars. Now, I've got some big news on the company I'll share with you guys towards the end of the video. Lastly is probably my worst investment. Luckily, I only bought 71 shares, Hybrid Air Vehicles. Guys, if you're watching, please stop crashing the damn things. I went through some benefits earlier. However, the best thing about investing in startups is something called EIS. It's the Enterprise Investment Fund. It's a government fund and it gives you certain benefits which I'll talk about. The first thing is you get a 30% income tax relief up to £1 million. Secondly, there's no capital gains tax to pay. So generally when you buy shares, you buy at a certain price, you sell it and you make a profit. If you go over your allowance, you have to pay tax on that. Now, as long as you hold the shares for more than 3 years, any profits that you make, there's absolutely no tax on that. There's also no inheritance tax. So if you pass away after 2 years, your dependents don't have to pay tax on any shares that you hold in that company. Now, just to make sense of all those things, I'll break it down and show you some numbers. So I'll give you 3 scenarios. The first one will be what happens if a company makes a loss. Secondly, what happens if the company breaks even, what that means for you in terms of your numbers and how much you've invested. Thirdly is what happens if a company goes up in value, so doubles in value, let's say. And I'll break down the numbers so it's easy to understand. Okay, in this part of the video, I'm going to talk about what happens if a company makes a loss. So if your initial investment is £1,000, from the EIS fund, you get a tax relief of 30%. 30% of £1,000 is going to be £300. The next section is loss relief. So if something bad happens to the company, it goes bust, it goes bankrupt, it makes a huge loss, whatever it may be, you can claw back extra money on top of your tax relief. So this is the way it works. Your initial investment was £1,000. You got a tax relief of £300. That leaves you with £700. This is based on how much income tax you pay and your tax bracket. So generally most people are in the 20% tax bracket. So that £700 times by 20% is going to leave you with £140. So the loss relief goes back to here. So just to summarize, your initial investment of £1,000, you got a tax relief 30%, which equates to £300. If something bad happens to the company, you get a loss relief based on your tax bracket. So if your tax bracket is 45%, 45% will go there. So that leaves us with a total loss of £560. Now the reason they do that is 90% of startups don't make it. So on your initial £1,000 investment, you've only really just lost half your money. The next scenario is if a company breaks even. So what happens there? So again, if your initial investment is £1,000, you get a tax relief of 30%. So that gives you £300. So you sold the shares for £1,000. So you've broken even. So that actually leaves you with a gain of £300 due to that tax relief. Okay, the last scenario is what happens if the company doubles in value. So again, we start off with our £1,000 initial investment. You've got your 30% EIS tax relief. So that will be £300 in this case. And remember, it can go up to 1 million. The company has doubled in value. So your investment has doubled in value. So the sold shares is £2,000. So that leaves you with a £1,300 gain. So you can see why the EIS fund is really, really good if it goes the right way. And if it doesn't go the right way, it limits your amount of loss. So you don't lose 100% of your money. Now, I did say to you guys, I'm going to let you know what the situation with PodPoint is. When I initially invested in the company, I wanted to hold the shares for a minimum of 5 years. The future is electric and they're making electric charging points. So I knew the company would be very valuable in, let's say, 5-10 years time. A big giant in the energy sector, EDF, came along and wanted to buy 100% of the company. As a shareholder, I have a voting right. I actually voted no to the EDF takeover. However, I was a minority shareholder. The majority shareholders, they decided for yes. Obviously, they'll make a lot of money. I don't think I'm allowed to disclose the exact figure, but it was in the hundreds of millions, this takeover. Now, I did make a 500-600% return. However, the company would have been so much more valuable in the future. Remember, if you want a free share, all you have to do is create a trading 212 account. They'll give you a share worth up to £100. Click in the description below. Remember, go check out my Instagram page. Please like and subscribe, and I look forward to seeing you in the next one.